Hello from Chicago, Alan Knuckman, high above the trading floor at the CME Group, talking energy with a focus on crude oil. Unchanged on the day, closing at 50.50, but getting up to the high from last Thursday at 50.85, so maintaining strength. What we're seeing now in the energy market, we're seeing some rally and some roll. Now we're into the November contract. That's now going to be the most active contract that trades here. November 50.50 is where it settled today, up above the $50 level, which is important. We had a 5% push last week, a big rally last week, holding that ground, like I said, getting up to last Thursday's high, the highest level we've been in many, many months. So we'll see if we can push through there and get some extension on this overall upward move. So that's a 5% move last week is a big deal in crude now that we've maintained here at 50. So let's talk about where we've been and maybe where we're going. Crude's gone from 47 to 50 for more than 6 weeks. Now that target's 53 on this upside breakout if and when we could get some follow through. It did travel that distance for, like I said, more than a month. So the longer something trades sideways, typically the larger the pending move when it does occur. Let's see if we can get some solid follow through on this crude action, but 50 is important psychologically as well. So we're seeing some reopenings and some restarting. So the refineries and the ports are coming back online after obviously a lot of this storm damage that we've seen across the United States. This disruption is still in the cards here though, with more hurricanes, and it's still hurricane season. You got to remind ourselves until October, end of October. So there's still some variables out there. Also last week we had some rig recoil, down 7 rigs, which is the lowest level since June. 749 is the number of rigs out there at work right now, and that's always been a concern that people would think that more and more of those would come online as the price of crude moved higher. Now we've seen a sentiment shift with these long positions increasing, a net increase of long positions, but smart money, hedge funds, and money managers have taken some of those positions off. So maybe they're ahead of the curve there. Maybe we'll see some pullback, but it's important to see how the markets react on any profit-taking round. Also, an added bonus right now is that you're seeing macro markets rise. You've seen the stock market make new all-time highs, forever all-time highs in the big 3 indexes. So the Dow, the S&P, and the tech markets are at records, so that could be supportive as far as the wealth effect goes. But back to price, it all comes back to price. This holding of support at 47 and that push to 50 and that 6 weeks range targets 53. The last time we've been up to that 53 level was back in March. So keep an eye on that. 50 down below on a weekly basis, an important level to maintain, and our next upside target is 53. Alan Knuckman here in Chicago.